Hey everyone, I'm Charting Man Dan with the Chart Guys. I've been trading cannabis stocks for over 13 years. We had the headline out of the DEA talking about rescheduling, 60-day comment period. It's a bit more official now. Spike up on volume, big upper wick of profit taking. What are we looking for the most likely scenario in the short term? The charts can help us determine that. So before the charts, let's get to a little bit of fundamental talk. Sell the news headlines. What do I think? So I did a talk with Manish from the Cannabis Investing Network that was put out today. We had that talk on Tuesday, and he asked me some good questions. I liked it because it was a lot different than what I do in these videos. But one of the questions was, what are we expecting on this headline, which we know is coming? And I talked about how I think the most likely scenario is a lower high in a continued tightening range, digesting the range from the initial Schedule 3 headline reaction last week. And, there's a number of reasons. Why are we selling off on this headline? So number one, it's the technical most likely scenario on the chart. After significant volatility in both directions, you scout equilibriums, which are tightening ranges. It's the most common pattern in stocks. It helps me with my trading and most likely scenarios immensely on all time frames. That's the most important factor for me. What other factors? Well, average Joe, not you or I, sees this headline and says, I thought that headline already happened. That was a week ago. There's people that are not paying close attention. There's no real new information. We know, well, now it's official. Average Joe doesn't care. They already heard this headline. And that's why you've got that Colorado senator or congressman or whoever talking about Schedule 3 as if it's already a done deal, because that's where people are at mentally. And now third, clearly today, and probably the second biggest reason for me is let's lay out this scenario and how this happened. So we know this news is coming sometime likely in the next couple of weeks. If we had to guess and pinpoint, if they want this for the election, it's got to come soon. And that's what Manish was saying in the podcast as well. Okay. Think about, we hear on Twitter from multiple people with thousands of followers that this is coming. Tom Angel posts a bunch of eyes. There's just a bunch of people talking about it. Think about how that happened. Let's keep going a step back. How do those people know to post on Twitter telling thousands of people before the headline comes? Someone told them, one of their sources in the government. Okay, source in the government tells 10 people. Those 10 people tell 10 people. 100 plus people have acted on this information before it ever gets to Twitter, before you or I ever read it. That's millions of dollars, most likely. If I didn't have any worries about insider trading or acting on this info or anything like that, I would buy 20,000 shares of MSOS and I would sell. I have two choices. I can buy that and I can hold and hope we keep running, or I can buy that and make $10,000 in 3 hours sitting on my ass by clicking some buttons. I'm taking that $10,000 on the day every time. Those people are selling into the public being the last to know. Think about how many people down the line are buying there. And then you have all the people with the Twitter followers that were buying before the actual headline came out. Literally thousands of people established positions before the headlines. Those are the people selling into this move to lock in their big money in one day, a few hours of work. That's clearly what's going on. These government sources are chatty Cathys with loose lips that love to gossip. It's not like you've got a tight knit boardroom with inside info that knows that their life could potentially be over if they tell people about it and it gets found out. It's a lot different with what's going on in the government and these headlines. Okay, now to the charts. I'm going to stick the link to the podcast in the comments of this YouTube video, and it's also on Spotify if you want to check that out. So I'm not having fun making these videos. I would so much rather come on here and say, I was wrong. Congrats, bulls. We're at fresh highs and getting follow through. I would have more money too if that were happening. But we keep getting the most likely scenario. I also have survivor's guilt because I am selling into these pops. Not everything, but I'm definitely taking profit into what I feel is the most likely scenario based on all of my experience trading. And it's the scenario where if I'm wrong, I don't lose $1. I leave money on the table. Whereas if I don't act on this, I'm leaving profits on the table and giving it back knowingly. So on MSOS, I drew this on Twitter before we started selling off. Nice pop. Now it's all about the hourly uptrend as we watch to see if lower highs versus the Schedule 3 tops Or can bulls follow through? If I'm a bear, I'm hoping this headline reaction, again, I'm putting on my bear glasses. I'm not bearish this sector, but if I am a bear, I know what I would be looking for because I trade bearish in the markets. I'm hoping this headline reaction marks the daily lower highs, impressive recovery. After the big market candle, we'll talk about that in just a moment. $10 needs to keep holding. It didn't. Here's what the bears are hoping for. So now, update to here, and this is potentially what's shaping up. There's still hope for the bulls. It's not game over. I know everybody keeps getting disheartened for good reason, but let's just talk about the most likely scenarios. So the video from last weekend, I talked about if we start this week with a few days of bounce, we're looking for a tightening range within this one candle. We're digesting the price action from that headline last week. Is that 2 weeks? That was already 2 weeks ago? Wow. We're digesting the headline from 2 weeks ago, and we're tightening up. And so now let's zoom in. Let's talk about most likely scenarios. When you have this much retracement size, you then create the second chance space. Meaning, if you get a bounce tomorrow to 10, 10.20, 10.15, bulls who didn't sell today and said, oh my God, I can't believe it happened again and I didn't sell again, they get their second chance to sell. Bears who say, oh man, I should have shorted the headline, that keeps working, they try and short again. So what we're looking at into tomorrow is, do we confirm an hourly downtrend? Do we set an hourly lower high compared to 10.50 on the bounce? Do we break that low, confirm the hourly downtrend? If the answer is yes, we will officially have set a lower high. We then scout a higher low compared to 876. I am going to reload what I sold today, anticipating that higher low. I will look for a candle that I can say that's either the daily high or low, or I'm wrong. I will buy, I will put my stop under that candle, and I will look to do this through a lot of May. Now, things that could change if the broader market sells off hard. The broader market is strong overall, just at all-time highs. But if we sell off hard, that's going to impact things, obviously. I don't foresee that in the short term. But let's see, we got 2 more weeks in May. And so we can pull back for a couple days, bounce for a couple days. Next thing we know, we're towards the end of next week, potentially. But step 1, do we confirm the hourly downtrend to officially set that lower high? How we break this tightening range is going to have significant impacts on what we're going to anticipate for the summer. If this tightening range breaks bear, it will be this weekly rising wedge breaking bear into monthly consolidation. So we're tightening up on the daily, and we're either going to break bull and test the Schedule 3 high in this uptrending resistance line, or we're going to break bear and head down to 832 support and see about the weekly uptrend and whether or not that's able to be maintained. But first, we're looking to tighten up a bit more. Individual names, TCNNF, same deal. Again, bulls are pleased with the recovery. I mean, this is a 30% bounce, but it's all within the range of that one day. Give it back, hold support, make a big move, fail resistance. If we confirm the hourly downtrend, we scout a higher low compared to 1042. We look for the direction that tightening range breaks. The analysis that I've just given on MSOS, now we can speed it up because it's just the same thing with different levels on these other individual names that are doing the same thing. Curaleaf, same deal. We've got the higher low down at 516. Anything under 640 is the lower high. Watching for something like this. Back to MSOS real quick. So I was impressed with this recovery. This market dump was, oh my gosh, here we go again. There's the bull's second chance for selling again. I was surprised to make it back to a new high of the day. I sold on this initial move up. 1030. And again, just some notes. This isn't, look at me. This is, we can utilize this information to make informed decisions to try and profit in this market. So bears will be hoping the official headline pop will set the daily lower highs for continued tightening ranges. Bulls still have full short-term control of the reaction. We were at the highs at that point. Protected bulls are assuming the daily lower highs are coming. So there was no sign of it at that point, but we assume that it's coming to protect, just in case. Just like on the way up, I was talking about this move right here. Bulls are looking to hedge. You short 995, you sell half at 985, you stick a stop at 1005. You stop out break even, but you protected your position. We knew $10 was a resistance level. We ran straight up, extended into it. It's not surprising to reject the first time around. Speaking of which, there's your equilibrium on the 5-minute time frame. And there's your bull break that led to a lot of follow through. They're everywhere. SNDL, different. So it's an uptrend. It's a daily uptrend. Obviously, we're not breaking out or following through, but it is a daily uptrend. So we can say a new daily higher low and a new most important short-term support is now 247. The way that I view this daily uptrend is we bottomed, topped out, quick higher low, higher high, established a support there. It's not a daily higher low. It was on a shorter term time frame. Here's the most recent daily higher low, 215, and now another one, 247. So we're just stair-stepping up. So that's a good sign. We're not in a tightening range on SNDL. So let's see if the bulls can maintain that daily uptrend. Are we benefiting by being on the NASDAQ? Probably. Dollar volume today. That's a good amount, 30 million. All right, on to the Canadian name, CGC. So I have to keep highlighting this signal. Doesn't work every time, but it works maybe 80% of the time. When your second, how many times have I said this? When your second 5-minute candle, or third or fourth or fifth, has higher volume than the first, your light flashes in your brain. This is unusual. I missed it initially. I watched this, said the bulls need a quick higher low here. I didn't get a great entry. I bought right at the high of the day, 1046. And it was because it was a quick pop up, and I sell a third real quick. These are two different things here. I had some orders in between of different trades, not in the sector. So I sell a third real quick. Why? Because I'm chasing at this point, and I'm hoping we follow through because I've seen it follow through a ton, but I know that I'm chasing. My support level's not that close nearby. 1019 is my support. I'm risking 2% plus. If I sell a third after a quick 1% gain, I then drop my risk a good bit. So let's see, that's 12 cents, which means I take 6 cents off my average for the remaining 2/3 of the position. That means my average is just under 1040. Still not great, but fortunately we hit the new high of the day and it was easy sailing from there, just scaling out. Again, I'm not nailing the top. We headed higher after I sold, but I say this is a quick 4% on 2/3 of my position. I know a daily lower high is the most likely scenario. I'm going to lock this move in that took 30 minutes to transpire. No, less than that, 20 minutes. I was in this trade for 20 minutes. If you give me 4% in 20 minutes, I will take it every time. It's how you don't go broke, is taking profit. Then I didn't trade it on the second time around. We gave it all back, new low of the day. Oh man, here we go again. Saved by the headline. And it looks different than the US names. We don't have as big an upper wick, but the scenarios are the same as far as most likely. Higher low compared to the low. Now we scout the lower high compared to 1492. Are we going to set an hourly lower high as a result of the next bounce? If the bell rings tomorrow and we drop down to 1060 and then we bounce up to 1120, that's our hourly high or low, and we keep an eye out for an hourly lower high. If the bell rings and we're higher and we head up to 1160 and top out, our key support will be 1080, and we'll be watching for that hourly lower high. If we break resistance, that'd be a great sign. But not going to hold my breath, because resistance here on the daily to get the less likely scenario of not tightening up, that is still 40% away from where we stand. Less, but 35. TLRY, same deal. We're just tightening up. So we didn't even get back to the high of a couple days ago. That's the high of the GME pump. So GME and these meme stocks are running. And because TLRY ran with them in 2021, because it was heavily shorted and there was a target on its forehead for these short hunters, I benefited, but obviously didn't go anywhere with it. Those meme stocks have now topped out. I'm viewing it like this. Key support, 191. Key resistance, 231. Tightening up. May break the tightening range before these other names. It's a bit different because of that meme pump. Cron looks different. It looks more like SNDL. Traded Cron on Tuesday with that bull break. Ended up stopping out with a small, insignificant green trade because I did keep a partial potential runner position. But new key support, we'll call it 288. It looks like a potential rising wedge. We look for a rising wedge when we get bull breaks that lack follow through. But can bears confirm an hourly downtrend? Still, holding on. The higher listed names don't look as ugly as MSOS and the OTC names as far as today's action. So MSOS has a lot more space in terms of retracement size. So again, what do I mean by that? Low of the day, high of the day, we retraced half of the move on the end of the day profit taking. You look at MSOS, and it retraced the whole thing, right? Do we hit a new low of the day? No, but it retraced 80% plus of the move. So it gave back a lot more, which means there's a lot more space for that hourly low or high. All right, I'm done talking. I will be scouting daily high or low re-entries. Bears have to confirm hourly downtrends for us to say, yep, okay, that is the daily low or high that we were looking for. And we'll see what we get from here. Loose lips in the government.